And in our top business story, Dubai's foreign trade increased by 3% in Q1 this year, hitting 331 billion dirham compared to 323 billion dirhams in the same period of 2014. Official statistics show that imports accounted for the lion's share at 205 billion dirhams, while exports climbed to 32 billion dirhams and re-exports reached 94 billion dirhams. China was Dubai's top trade partner with 47 billion dirhams worth of goods traded. India stood second with trade value totaling 24.7 billion dirhams, followed by the United States of America with 19.5 billion dirhams and Saudi Arabia with a trade value of 17.1 billion dirhams. Commenting on the numbers, His Excellency Sultan Ahmed bin Sulayem, the chairman of DP World and chairman of the Ports, Customs and Free Zone Corporation, said that Dubai has demonstrated the ability to withstand the impact of the global economic slowdown in major trading areas, as well as the decline in oil prices and currency swings. He added that the Emirates' foreign trade is leveraged by its world-class infrastructure and the trading and customs services put in place to cater to the needs of traders and investors. Dubai continued to see steady supply growth during the first 6 months of the year as performance within the residential and hospitality markets began to soften after a 3-year period of sustained growth. According to global property consulting firm CBRE's latest Q2 2015 Dubai Market View report, Dubai's rental market continues to outperform the transactional market, although residential leasing rates are beginning to witness marginal declines. According to CBRE, this reflects the relative strength of the Dubai economy and the sustained levels of occupier demand against the emergence of weaker sentiment in the sales market, particularly for completed and ready-to-occupy properties. Average residential sales prices fell by around 2% quarter-on-quarter, mirroring the decline recorded in the first quarter. This reflects the current weakening of demand as well as global economic conditions that have negatively impacted investor sentiment. Despite the declines recorded during H1 2015, sales prices still remain around 1% higher than the same period last year. As has been the trend in recent times, downtown Dubai, Dubai Marina, Emirates Living and Palm Jumeirah continue to generate the bulk of transactions. With the world increasingly becoming digital and mobile, UAE businesses are looking to omni-channel to further drive growth. However, many of them are not quite confident about the effectiveness of their information technology infrastructure. In a survey by KPMG and Consumer Goods Forum, about 7 in 10 retailers and consumer goods companies in the UAE said they are concerned about cyber risks. With cybercrime costing businesses around the world millions of dollars, many of the data breaches reported in recent times involved high-profile companies in the retail sector, including Home Depot and Target in the United States. As more consumers prefer online shopping or turn to social media, companies in the UAE are looking to omni-channel retailing, which refers to the use of a variety of channels, including retail stores, mobile and online shops, apps and telephone sales in dealing with customers. While 94% of the surveyed companies in the UAE said that at least 10% of their sales were generated online, 70% of the UAE respondents said that protecting customer and company data in an increasingly digital world is going to be a challenge over the next 2 years. KPMG's third annual Top of Mind Consumer Survey was conducted globally during the first quarter of 2015 among 539 senior executives from companies in the consumer manufacturing and retail sector with at least $250 million in revenues. According to statistics compiled by the World Gold Council, consumers from China and India are by far the largest purchasers of the precious metals, scooping up more than 360 tons of gold jewellery in the first quarter of 2015. During the same period, Chinese consumers acquired 213.2 tons of gold jewellery, which is still the highest in the world, although the number is 10% lower than a year earlier. Indians, on the other hand, beefed up their acquisitions of yellow necklaces, earrings, brochures and the shiny adornments and trinkets, with the total gold jewellery demand hitting 150.8 tonnes, a 22% jump from the first quarter last year. The size of gold purchases of the two countries are clearly eclipsing those of other markets, including the United States, Saudi Arabia and UAE, which are the third, fourth and fifth biggest gold jewellery consumers, respectively.